Pat, several people who saw your video suggesting that a house is not necessarily a great investment have said to us that they see it as a source of really building their net worth. What do you say to that?
Well, I'd say anything can be a source of growing net worth if you buy it when the price is going up. And house prices have been going way up in the past 20 or 30 years. And people were able to buy them, especially in Canada, on very advantageous terms. So of course anybody who did it 20 years ago is way ahead. But the thing is that there will come a time when houses get so expensive in relation to income that it won't be a good idea until you really need the house. I think you need to be aware that what worked in the 1990s won't necessarily work in the 2010s. That's why I say that some people in those comments, and it's very true, they were able to borrow early on and buy stocks on borrowed money because they had the house as collateral. Well, sure, but that introduced leverage, and leverage is not always a good thing. So I would have to say that if you want to, they're two separate things. You can borrow money to invest without owning a house, or you can borrow money to invest using the house as collateral. Either way, the interest you pay is tax deductible, and the bank will be more inclined to lend you money if you have the house as collateral and if the house is worth a lot more than what you currently owe on it. But for you, going directly to your need for financing to buy a portfolio, you don't need to buy a house to do that. And therefore, I say buy a house. Think of it as, do you want to spend the money on it as a consumer item? And it probably will gain value for you, but it may not be the best thing for you if you're only interested in borrowing more money. You may be better off just starting out buying stocks and borrowing money on a line of credit.